All right. Good morning, every. Good to see everybody. Do me a favor, click on that share button. If you look down, we see all the acute emojis. So you see the thumbs up, the clapping, the heart, the light bulb. I don't even know how to do it, and the curious face. Right next to it is a little share um, button. Click on that thing, get it out there so folks know to join us and be part of the conversation. Today is going to be a really good show. It's one I'm really looking forward to. It's one that actually we had originally scheduled when Blackout Tuesday happened. So unfortunately, due to the events in the U.S., I think we made the right decision and postponed the show. But now we are back up and we got Joe here. So with that, let's get started, everybody. Good morning. Welcome to the 52nd episode of FinTech Insider, the Breakfast Show US. 52 of these things already. I'm Sam Maule, FS Managing Director, North America. I'll be your host for the morning show. Do let us know where you're watching from around the world. Yesterday, we had folks, good Lord, Cyprus, Philippines, Saudi Arabia, Turkey, Spain. It was incredible. Let us know where you're coming from, and we'll make sure we give you a shout out. Please share the link to the stream, hit the like button, and please subscribe to 11FS on LinkedIn so you never miss a show. I want to give a shout out to the two reports that we have out there. Our latest research report with Plaid about how open financing will shape the industry. You can find it on the link that Bianca will post in the comments or at bit.ly/Open Finance 2020. We also have a report on the jobs to be done for the SMB space here in the US, another great report. All right, let's kick off with three news stories from the past 24 hours that caught my attention. They should have yours. TechCrunch reports Monzo, the UK challenger bank with more than 4 million customers, has confirmed it has closed $60 million in top-up funding. Backing around are existing investors Y Combinator, General Catalyst, Excel, Stripe, Goodwater, Orange, Thrive, Passion Capital, along with new investors, Reference Capital, and Vanderbilt University. That's a cool one. Vanderbilt University in Tennessee, great school. Go Commodores. One of the fintech's worst kept secrets, the down round sees the bank take a 40% hit in its paper pre-money valuation compared to previous rounds, now priced at 1.24 billion pounds, so still a unicorn. Monzo is also disclosing that its business banking product has now reached 25,000 apps. Launched officially in March, the business bank account is aimed at sole traders and SMEs with both free and premium paid for versions available, offering various feature sets. I think Monzo, what it's going through is reflecting what basically a lot of companies, period, are going through right now, thanks to COVID. Our second story comes from Housing Wire. And like I said, I read a lot of stuff, folks. If you've never read Housing Wire, read Housing Wire. It's a pretty cool site. They report the FBI has reported a 50% surge in mobile banking since the beginning of 2020, likely due to stay-at-home orders, and has issued a public service announcement cautioning users on the potential for increased risk of cyber fraud as a result. Shocking, I know. App-based banking Trojans and fake banking applications were among the variety of techniques the FBI said it expects cyber attackers to employ. U.S. security research organizations report that in 2018, nearly 65,000 fake apps were detected on major app stores, making it one of the fastest growing sectors of smartphone-based fraud. According to Adam Chedberry, president of Funding Shield, there are two key points that drive risk in terms of digital mortgage and title fraud to make companies and consumers high-value targets. First one, whenever there's an exchange of data, especially sensitive data, and the second, whenever funds are being transacted. Within the first 2 weeks of America's recent work-from-home environment, Funding Shield cited a 62% increase in wire instruction errors, documentation errors, and fraud attempts. And personally, I know a good friend of mine who does a lot of real estate transactions. He has a lot of rental homes that was a victim of wire fraud. Funniest part is his brother, who's his partner, is an executive at one of the top 4 banks. And he was the one that passed along the wire instructions. Joe, that'll be a story I tell you over beer sometime. And my last story, the Motley Fool reports recession and financial crises often have a way of changing the banking landscape as a result of deal making and new regulation. But they also impacted the way banks lend. For the period of time from 2006 to 2019, commercial real estate, or CRE loans, volume grew from $886 billion to $1.5 trillion. Now, there are a lot of CRE loans that have never been stress tested in a recession, let alone during an event like the COVID. A CRE loan is typically made to a borrower or company for securing a property for its business. Examples include a storefront for a retailer, an office building for a company, a large building for a hotel, an apartment building that houses more than 4 units. Motley Fool states commercial real estate will never be the same as a result of digital and remote trends that have accelerated during the coronavirus, and that's what we're going to talk about today. So let's bring our guest in, my good friend Joe Brady. Joe is the CEO of Americas at the Instant Group. On today's show, we'll be looking at the changes the current situation is making to the commercial real estate industry, and a lot to do with banking and what the future may look like. So, Joe, man, good to have you on. How you doing?
Hey, Sam. I'm great. Good to see you.
How's Chicago?
It is sunny. So, yes, you have winter and then you have road construction. So those 2 seasons, we're deep into road construction.
Oh, beautiful. And it's Florida, so it's sunny and it's hot. So Yasser, who's in Manchester in the UK, sorry, dude. I know it's rainy and gloomy. It's Manchester and it's summer. Don't worry. In about 3 days, it'll be beautiful. That's the way it works. The way it works in the UK is every time they have a holiday, it gushes rain. And then as soon as the bank holiday goes away, it's beautiful. That's just the weather patterns in the UK, which I find funny. All right, Joe, let's set you up as a subject matter expert when it comes to commercial real estate. So can you tell us a little bit about yourself, what you do with the Instant Group, and who the Instant Group is?
Sure. Happy to. Sam, good to be with you this morning. I've been in commercial real estate for over 30 years. And most recently, before joining the Instant Group, I was the head of real estate for Walgreens. Walgreens has over 9,200 stores in the United States, about 150 million square feet of space, and they spend about over $3 billion a year in occupancy. So very large portfolio. Prior to that, I was at JLL, Jones Lang LaSalle, where I led both the retail and banking platforms for corporate solutions. So my mom was wondering, why would you go from being head of real estate at Walgreens to a company called the Instant Group? And I have to say, I was massively intrigued with that big aircraft carrier that was Walgreens and trying to future-proof that portfolio. The world's changing exponentially. It's Moore's law, and corporate real estate has traditionally been demonstrably just linear and inflexible. So I was massively intrigued with how to future-proof, how to gain optionality, how to gain agility in portfolios. And I joined the Instant Group, which is a global leader in agile and flexible workspace, because I thought that this idea of flexibility and agility was on trend. It was prior to COVID-19. And as we're emerging from this pandemic, I think it's squarely on target. And so Instant exists to help our clients move forward faster. We advise, find, and build flexible and agile workspace for corporates all across the world.
And if you're ever aligned for a time that none of us saw coming. So I've known Joan for a couple of years now. Joe actually invited me to speak back when he was at JLL, and we became pretty good friends at that point. We like to dig into things. Yeah. So that's a safe thing to say. Just about any topic, but especially around the impact that digital, technology has on our everyday lives. I think that's a safe thing to say, Joe. And by the way, for everybody outside of the U.S., Walgreens would be like Boots. I mean, we're talking Walgreens owns Boots.
Walgreens is Boots. It's Walgreens Boots Alliance globally.
See how smart I am, everybody? I just figured that out. I was like, wait a minute. I gave an example. That's literally what it is. So when we say Joe knows commercial real estate, we're not exaggerating. And especially when you're like in New York or London or San Francisco, and you're looking at like banking property, commercial real estate in the heart of it. So like Canary Wharf, you will see JLL signs everywhere. I mean, JLL is a massive player when in this space, right? I mean, Joe, I could just go ahead and say that. Yeah. So you know what you're talking about. So let's talk a little bit about COVID and its impact on commercial real estate. So the lockdown here in the U.S. is starting to lift, although I would say primarily in the South, we're seeing significant rise in cases. All right. Here in Florida, we have been north of 2,000 cases every day now for about the past 4 days. Texas is seeing an incredible rate. Arizona, same thing. But New York, Detroit, Chicago, kind of the northern cities are seeing definitely a much larger lift and people are kind of getting back to some semblance of normal. So when you look at this and you look at, let's take commercial real estate from a banking perspective in particular, when you look at those commercial real estate spaces, take Michigan Avenue, right, in Chicago, what do you think the new normal is going to be? People just going to rush back into the offices, or are they going to still work from home? What's going to be the blend?
Yeah, so Sam, I would say that let's bifurcate and let's think about metro areas like New York and Chicago in particular, probably a little less so DC, San Francisco, but New York and Chicago that have a heavy reliance on public mass transit into high dense urban areas. And so we're seeing two villains in the built environment emerge around COVID-19. The first is public mass transit, and the second are elevators. So what we're seeing is a hesitation by corporates, particularly in Manhattan and also in Chicago, saying, do we want our people getting on a suburban train to travel into a city to potentially get on a subway or an L to then wait and have the indignity of getting their 8-minute time slot to get on an elevator to get up to their space? There has to be a really good and compelling reason for you to want to go and do that. And so one of the things that we've seen emerge is this notion of first ring suburban. This idea, we have work from home, WFH. Everyone, we all need an acronym, right? And what we're seeing is this now idea of work near home. So the idea of finding space that is car friendly, not public transit reliant, that's low to mid rise, and so it's stair friendly and therefore not reliant on elevators. People need to get out of their houses, and we're seeing it all across the way. The good news is, and I love this. This was a great quote from an architect here in Chicago named Lamar Johnson, and he said, the work from home is no longer the enemy of the C-suite.
Amen. So let me tell you some of the things I've thought about. And see, here's why I love Joe, right? We're talking about commercial real estate, and he raises 2 points that you just don't typically think about, which is your commute time and how you commute, and then how you actually transit from the lobby to the to your workstation. Because the reality is, with safety and everything else, you're funneling people through choke points. That's the idea, right? You badge in, so we're funneling you through there, and we're funneling you into elevators. I'm thinking of City, LIC. So Long Island City, the massive City Tower. You've got maybe 5, 10, 50, maybe 20 elevators, 20 lifts, but you got thousands upon thousands of people going up and down in those every day. There's no way you're taking stairs. And you're right. I have no desire to sit in a closed space, breathing in the person next to me. And I'm a dude that was spent months on submarines. I flat out have no desire to sit in an elevator with other people. Open spaces I get. And Brian Clagett, we love Brian, used to be at Gizio, actually had just posted this in the comments. I noticed my Black Creole group, RAIT, is on a buying spree, mostly in suburban areas. I don't think you'd be surprised at that at all, Joe.
I'm not. And, it's just a safety factor and a convenience factor. So unless and until there's a vaccine, no one has a crystal ball. As we were talking before we went on air, we're flying the plane while we're writing the manual, and we've never been in the plane before. It makes sense. I would say everyone always talked about amenities, right? Oh, our office has this, our office has that. The only amenity that counts right now is safety, employee health and safety, period, end all. And so whether you're a building owner, whether you're a corporate with tens of thousands of employees, that is the fundamental focus right now. Nothing else is worth it.
I'll tell you what we've seen at 11FS, because we are consultants, right, with very large FIs, insurance companies, and other groups, where in the past there was always that moment of tension where we're like, we're a London-based company. I know you want us to do, we're doing this project for you, and it could be globally, it could be in Singapore, it could be in Africa, it could be here in the US, and it's how much time do you need for us to be on site? Because the reality is, in our opinion, it needs to be minimal. We're going to do our best work where we're at. We get it done. It's the most cost effective. Having consultants on site, folks, is expensive as hell.
Mm.
It is. You're paying a premium per hour for those people. And to have them on site, to have them have your bank issued laptops and eating up a cubicle and everything else, that's expensive. We're not seeing that whatsoever. That's not even a consideration right now. Our working model is suddenly hot.
It is. And what I'll tell you, like 11FS, Instant is based in London. So we have that going for us, which is good.
That is good.
And in late March, we looked around and said, this is unprecedented. What should we do? And we assembled and created something called the Agile CRE, which stands for Corporate Real Estate, Agile CRE think tank. And in the last 10 weeks or so, we've interviewed 55 corporate real estate leaders across 4 continents to try to crowdsource the ideas that are going through people's heads. What are you thinking?
Yeah.
How are you approaching this? And it initially started with the shock and awe of the crisis. And now it's about reopen, reentry, recovery, and really what's the next normal? And how do we play that? Because there's going to be a normal after that, invariably. So, we wound up hearing from people that there were really 3 key notions. And the first was this idea of a networked workplace. So work, this is really, Sam, more of a focus about work than it is about your address. And so when you think about the 3 C's of work that we kind of think about, you have concentration work, you have community, and you have collaboration. And so it's almost like you're going to commute for your day, just like you dress for your day. If you have a big meeting, you'll maybe wear a suit or maybe a tie. Although I've never seen you with a tie on. That's probably possible. I
used to wear suits and ties.
Exactly.
Don't know where they're at.
So if your intent or your purpose for the day is heads down, task oriented, concentration work, you might as well do it from home. Why commute? Yeah. Why have any friction in your day? If there's an element of coordination or collaboration, that work near home concept could be impactful. I can get out. I can get to an office space that's private, that's controlled. I can see colleagues. I can have my industrial internet. I can have a copier. We have whiteboards. We collaborate. There's cohesion. There's creativity. Those types of things can happen. And then really from a community perspective, if you think about something that's truly brand specific, whether it's a client meeting or a pitch or senior executives or board or something that's truly brand, that's bringing that community together, it may then make sense to head on into the city, head to your core, your hub office to partake in those types of activities. But really what we're seeing is this notion of purpose-driven work, and that being primary as opposed to the address where you're actually doing it.
I think I love how you started that and actually put it back in the comment stream, right? It's thinking about work, and I'm putting that in quotation marks, and not your physical address. We're seeing definitions changed all over the place. And Sid Rahar, by the way, as always, has asked a great question, saying, what changes to the economics will be necessary in making, working economically viable going forward. So layering of services, and you've talked about this, right? Layering of service employs secure PCs, software, VPN subscriptions. I think what we're going through, and COVID has massively accelerated, is redefining what the concept of work means, right? We did it with digital, right? We talk about what is the meaning of identity? What is the meaning of trust, right? And we go back and forth around the regulatory environment for that. We go back and forth on what the definitions are. My daughter, Alex, whose room I'm in right now, nice surfboard, right? You like that? Her definition of trust and what she's willing, and privacy is completely different from mine. What she's willing to share about her life as compared to me is completely different. What she sees as work, I already know this much. And Joe, I'm curious on this comment. the idea of working for a company for 40, 50 years, that's pretty much has died, right? But even the concept now of working for a company for 10 years, I seriously don't see Alex doing that, right? I see her doing 2-year stints, right? Doing a year, that concept of contract work. What I know people call it the gig economy, but I think that's going to continue to grow massively, which changes how commercial real estate works.
Right? I mean, it's simply Moore's law. You think about what's going to happen when the full effects of 5G hit us, right? Where you take a 2-hour movie that 3G took 2 hours, 4G 20 minutes, 5G it's going to be 8 seconds. I mean, think about that power and what's going to happen. We were recently visiting with a global architecture firm that was showing us this concept of an always-on office. And so with the use of VR, AR, MR, mixed reality, you can actually have the digital twin of your particular office. So your 11FS office in London, you could throw on a pair of Oculus glasses and be standing next to David Breyer, and you're in the same.
Scary.
I know, right? So, or how about Simon? We go with Simon. So you could literally be in that same room, working on the same whiteboard in a mixed reality setting. So not to get too trippy here, but the idea that companies need this huge cost suck of corporate real estate is being absolutely evaluated again. Do we need, everything's being asked. We're rethinking everything right now, which is kind of a instant group tagline. Let's rethink work. Let's rethink space. Do we need all this space? The space that we have, could it be better? One of the trends that we see coming out of our Agile CRE think tank is, and I was joking leading up to our session this morning that I'm going to talk about the fact that the office is dead and other clickbait. It's not dead, but it's going to morph. And so one of the lines of thinking is that corporates may take less square footage overall in their hub locations, but it will be really, really nice. It will be even upgraded more because when you're there, you're going to be collaborating, you're going to be meeting, you're going to be sitting in conference rooms, some with tables, some with what they call resi-mercial, fittings and fixtures and so forth and furniture. So we're going to see a bit of a change there. And then the idea of the suburban challenge there, partly because a lot of the suburban office stock is like 1970s shag carpet, right? It's not immediate. It's not ready for move-in. But the good news is, and kind of putting my retailer hat on, there's a lot of empty boxes out there in retail and at malls. And I know that my work with ICSC, which is the International Shopping Centers, is such that there's an intersection now. Offices need to have suburban office space. Companies need to have suburban office space, and the retail mall owners happen to have empty boxes that could be reconfigured. Yep. So we're seeing an awful lot of that happen. It's quite interesting.
I wanted to go there, right? So the death of malls, right? Which it sounds bad coming from Sam Maule. Death of shopping malls. That's a whole nother episode, folks. The death of mall. But the death of shopping malls, which we've seen coming over and over again, right? We're seeing the big, I used to have the anchor stores, JCPenney, right? Sears, Circuit City, Macy's. I mean, you take your pick, right? The absolute ass kicking they've been taking over the past couple of years, and COVID just accelerating that with these companies going bankrupt. And I've read over and over again, you've got these large places, enclosed shopping centers, which aside from being a great hub for a zombie apocalypse to hold out, I've always recommended that, right? Good place to go. But for data centers, for office spaces, right? For medical facilities and stuff like that. I think you can get reuse out of that.
We're seeing multifamily as well. This idea of blended real estate, right? So you have concepts like Lifetime Fitness that it will go in and put a 40,000 square foot health club facility. And there was a situation, I believe, where they're also doing some multifamily as well. So not that you want to live at the mall, but it's a redefinition of live, work, play. And for a suburban office setting, you've got the food court, you've got other amenities, and there's interesting things to do. So, but I would tell you, again, death of the mall is probably clickbait. There is a difference in malls. A malls will exist; they're doing just fine. C malls are going away, getting plowed over, redeveloped. It's the B malls that have to determine if their existential challenge here is how can they pivot? What can they become? And so I know a lot of Seritage, for instance, is a company that was set up that took a majority of the Sears real estate. And so Ben Shaw, who leads that, has been redeveloping those boxes into lots of interesting things. In fact, he has over 10 industrious locations in his portfolio. So we are seeing it. It's not theoretical. Yeah. I think a lot of what we talk about now is kind of theoretical. I was talking with Tim Rodber, who's our global CEO at Instant. I was saying, I kind of feel like we're in a giant catapult with a lot of tension, and we're getting ready to be shot forth. Like there's a lot of built up tension. We're seeing that, but unless and until we start seeing, we're seeing New York open, we're seeing Chicago open, and some other cities, unless we can get back to some level of normalcy, it's still going to stay pent up.
Yeah, I love that concept of pent up tension. So, for example, Business Insider's reported U.S. retail sales post a record 17.7% jump in May, doubling estimates as consumer activity rebounds. A story worth everybody going out and take a look at. Personally, I would say look at August as the litmus test. Right. Let's get past all of the government aid that's been put out there. Let's see if we get a second wave, as we think we're seeing right now, COVID in the U.S. August, I think, is a good mark to see what life is going to be like then. Kids getting ready to go back to school, college, everything else. Two quick questions, and then we got to run. So Amanda Moore, hey, Amanda, our favorite MBA graduate, Amanda Moore, asked this, and then Brian Clagett had responded. And I'm going to get your take, Joe, as our last question. How has COVID changed your views on investing in real estate assets, such as REITs for personal finances? Brian said, look, my REIT pays almost a 5% yield. Basis is down about 10% year to date. That said, they are buying low-rise mixed-use space aggressively. So you're a financial advisor, Joe, but you are a subject matter expert. How would you respond to that?
I think there's, first of all, know what you're investing in.
Period.
Period. Yeah. Thank you, Warren Buffett. I'm out. There are areas in real estate that you certainly can invest in that make a lot of sense. There's some senior housing REITs that have been beaten up, but at the end of the day, all of these, the thing about real estate is there's terminal value. At the end of the day, even if there's not the income that's coming in, but like Brian said, he's getting 5% yield on his money. There's still intrinsic value. Walgreens, for instance, owns billions and billions of dollars worth of real estate. So if you're think about what you're investing in, there are areas, and I think there's tremendous opportunities. I mean, these are the times where billionaires like Sam Zell have historically, through down periods, done what his nickname is grave dance, and there's a reason why he's a billionaire.
So Amanda, Brian, I'll make this easy for you. Joe, where's the best place to people to reach out to you if they want to learn more?
Thank you. Joe.Brady at theinstantgroup.com. Twitter is JABrady03, and on LinkedIn as well. So thanks, Sam.
Yeah, there you go, Amanda. And Brian, I know, was about to reach out to you with a ton of questions. Like I said, I've known Joe for years now. He can go deep on pretty much any topic, which is just my favorite thing to do. All right, everybody. Thanks for being here. Tomorrow, I'm joined by our own 11FS, Adam Davis. Adam Davis, my brother in London. We'll be talking about open finance tomorrow. Adam is brilliant. You're going to enjoy that conversation. Again, if you know someone who'd be perfect to come on this show, don't hesitate to reach out to me at Sam Maule on Twitter, or Sam at 11FS, or breakfastshow at 11FS.com. So for example, somebody has suggested this, and we're going to have Nancy Durate on Friday. If you have done anything around having to write a presentation deck or to do public speaking, you need to be on. Nancy actually did all of this slide work for An Inconvenient Truth, which won Al Gore an Oscar. So we have an Oscar-winning slide presenting person coming on who's a genius. Everybody, thanks for joining today. We'll see you tomorrow.
Thanks.